You guys, I am so excited that you have decided to spend some time with me, your most favorite Texas realtor, Jennah Sears, by listening to this podcast, Come Home with Jennah. We have a doozy of an episode for y'all today. I am here with one of my most favorite lenders, Ryan Grubbs with Cross Country Mortgage, and he is going to be sharing with you a little bit about the lending process. And because we all love Texas here, he is going to be sharing a little bit about his journey and what Texas looks and feels like for him. So, Ryan, tell me what you love about Texas.
You know, I just love the people here in Texas. Everybody is just so friendly. And I mean, just driving down the road, people wave at you. You see them, they all want to say hi. You know, it's incredible. So that is one of my most favorite things about it.
I love it. We are very friendly. So aside from lending, tell me a little bit about what you do as far as the ranch adventure that you have. Give us some cow tips.
Oh, gosh. So one of my favorite things that I like to do is my kids are highly involved in the 4-H here in the Denton County area. So they like to show livestock. And so we show cattle. And so we've got cattle at our house that, we exhibit at all the little, county fairs, livestock shows at Fort Worth, Houston, San Antonio. We just recently traveled to Kentucky. So cool. It's just a lot of family fun time, and it's just something that we all enjoy doing together.
I love that. And something that is so important for everybody that I work with, and also what I would hope you would be looking for too when you're looking for people to support you in your move, purchase, or sale of real estate, is that you really connect with authentic people, and you should be doing business with people that you enjoy. So remember all the way back to episode 1 where I really told you that you needed to interview your real estate agent and pick one that's good for you? I feel the exact same way about a lender. So Ryan, tell us a little bit about the lending process from the perspective of a first-time home buyer. What is something that they are going to need to come to you already having prepped that would make their purchase smoother?
So that's a great question. Obviously, whenever we talk to any buyer, just always want to start off with just a great conversation with them, okay? I want to really understand, what are their goals financially with the home purchase? Where are their budgets, limitations, because I love using the phrase, you don't only got to love the house, you got to love the numbers of the house as well, okay? So understanding, in regards to where they want to be with a monthly payment, down payment, all those different scenarios. So really the main things I would highly recommend is coming prepared with, understanding what your income is, what you're making. It's amazing. People really don't understand what their actual monthly income is sometimes. Wow. Knowing what your assets are, where, what you have in checking, savings, retirement funds, investment accounts, stuff of that nature. Even though you might not plan on using those funds, it's important to know it just because that can help strengthen your overall financial picture when you're trying to get a mortgage.
True. And one of the things that I walk through with my clients while they are choosing a lender is to really look at that budget, because just because you're pre-approved to spend a certain amount of money, that doesn't mean that you necessarily want to spend that amount of money each month. And I swear I've never had a client that didn't fall into this bucket. If you can spend $400,000, you're going to fall in love with the house that's $450,000.
Right.
If you can spend $1 million, you're going to want a house that's just over that budget. So if you go into it kind of understanding what that monthly payment and those bills and the HOA fees and all the things associated with the budget, I think you're going to be able to make a better decision. So tell us, what goes into a mortgage payment?
So basically, the handful of things that go into it, it's, like the principal and interest. So actually the base payment of repaying what you're borrowing, okay? But then you also got the homeowner's insurance you need to factor in, the property taxes, depending on your down payment and the type of loan program you're doing, you might have mortgage insurance as well factored into it. And then, of course, your HOA dues, okay? Now, those are paid separately, but it is still something you got to factor in as part of what your monthly expenses are going to be on that home.
That is such a good point. I think a lot of people will look at Zillow, and Zillow will tell you a lot of things that just they're not really the full truth. So if you look at a property and it gives you an estimated mortgage, what are they talking about? Because their numbers never look like what I see.
No. Sometimes I wish that was actually the payments.
Yes, I know, right? But it isn't, because Zillow isn't going to factor in those other things. So what gets wrapped up in there?
You know, a lot of times what I find is that what Zillow factors in sometimes, it's not the down payment that the client's really actually looking to put towards the home purchase. The insurance is not a realistic number. The taxes are way off, so there's a lot of different factors that I've kind of backed into to find, like, these are the errors that they're making when they're proposing these estimated payments.
Right. So when people come to you, it would probably be a good idea for them to know what their all-in number is.
Right.
So that is going to include their property tax, their insurance, and all of those things. And then you can kind of work backward from that. And you have accurate numbers, correct?
Correct.
For taxes and all those kind of estimates. So what kind of estimates are you giving to first-time home buyers, or really any home buyers?
Well, so one, we're trying to work in just like what you said in regards to backing in. Okay, now, again, you understand too that every property you look at, we can go look at 10 different properties that are for sale for $300,000. And all 10 of those are going to have different property tax figures to them. So, I highly always encourage them to call me, give me an address. Let's pull up the taxes. Let's look at things, and let's really get it more narrowed down on that particular property to make sure that there's nothing crazy or wonky that's going to throw the numbers that we've kind of estimated up front off.
Right. Because nobody wants a or an oopsie or a surprise on that closing disclosure when it comes to the dollars and cents of it. So another thing that I think a lot of people are surprised about is that I, as a real estate agent, and most professional realtors, they're going to require either a pre-qual or a pre-approval letter from a lender prior to even looking at a house. So I mean, what goes into that process? How do they get that letter? And why do I care so much if they have it?
That's a great question. So obviously, to understand the differences between like the pre-qualification. So again, like what I was talking about earlier, I want to have that great conversation to kind of start off. That is really what the pre-qualification is that we've had that great conversation and we've just done a basic credit check, okay? So that is what a pre-qualification is. We taking their information just verbally, okay? Now, the difference with the pre-approval means that we've gone ahead and we've collected like the documents to support their income, to back up the assets that they're going to use to purchase the house, and we've documented that. We have it. We've had an underwriter take a quick look and give us all like basically a thumbs up to know like, hey, these people are solid. They've got the documentation that backs up their application.
I love that. Because there is nothing worse than getting under contract on a property and then the financing falls apart, and now you have both the buyer and the seller upset. So getting that pre-qual is vital. It is one of the most important steps of your entire home purchase. So first, you're going to be building a relationship with your real estate agent and your lender. Then you are going to be really working through your budget and making sure you understand what that looks like and what's going into it. And then we get to look at houses. That's when we get to look at houses, because everybody just wants to look at houses. I mean, I like it too. It's my job. But there are a lot of things that go into the process before you just call a real estate agent and ask them to tour you around. So those are super important. I absolutely appreciate that information. The other thing that I'm hearing a lot of is, we all know in 2020 with COVID, we had extraordinarily low rates. So a lot of people who might not have been able to purchase in a different market were able to get those loans. And as we move forward, the market is shifting as it does. So people get nervous as rates rise. They get excited as they fall. How does that work? What are these numbers? Like, who's the boss?
And that's so that's a great question. And honestly, it's one that I've answered a lot here recently, and it's hard for everybody to really comprehend this because we've been living in this, like, what I like to say is an artificial rate environment over the last 15 years.
La La Land, yeah.
Those are not real interest rates, okay? So let's take a step back to, like, financial crash, Then the Fed learned something new in regards to how to impact our economy. And they made it very clear multiple times that our housing market is one of the biggest drivers behind our economy. So how do we impact the housing market? So what they did was they were purchasing mortgage security notes. Those are what influenced the actual rates.
Okay.
So they were purchasing these in large volumes, being one of the biggest buyers of these notes in the market. All right. But when we stepped out of the financial crash, they slowly eased out of that process.
Okay.
So we really didn't see rates go up for a long time.
Yeah.
Okay. They were actually finally starting to peak back up into the fives right prior to COVID.
Okay.
Really briefly.
It's good to know.
Okay. But then COVID happened. All right. Fed jumped in. They did this again. All right. And then this is now what we're coming out of. But where the market's at is that basically the Fed kept that purchase program going for longer than what many feel they should. And that's what led to the inflation issues that we're facing now and made the Fed basically have to slam the brakes on instead of easing out like they initially were planning on, trying to curb inflation.
I understand. So the rate is changing based on our entire economy. It is not just on if they want Americans to be able to purchase the American dream or participate in home ownership. It's bigger than that.
Right.
So when we hear that the Fed has raised the rate, that doesn't necessarily mean that what you're pre-approved for or what your specific and individual mortgage rate, I mean, that is different.
Yeah, exactly.
Okay.
So now, keep in mind when the Fed does these things, it does impact how the market's looking at things, how they're forecasting long-term economy, because when the Fed's making these decisions, it's basically how they're saying our economy is going and where we are moving forward. Now, they have gotten it completely wrong, okay,
Fair.
for a long time. And it's kind of scary in a way, and that's why we are where we are today.
Okay.
So,
well, that makes a lot of sense because I think what I'm seeing with a lot of my buyers and even my sellers is they're concerned that they waited too long and that this is not a great time to purchase because they're not seeing the same rates that we were seeing in 2020. And what I'm hearing you say is that just isn't the case.
Right. And that's where we are back at those same interest rates where we were prior to the financial crash. And those are normalized rates.
Okay. That's really encouraging to hear because I think a lot of people feel like they missed out and that they're going to wait for rates to go back down. But I'm understanding from what you're telling us is that those are historically low for a reason, artificially.
Correct.
Really because of where we were in the economy.
Correct.
So we just want to dispel any fear that you have or that, our listeners or our buyers might have because buying a home feels scary enough. You don't want to feel like you're getting the short end of the stick.
Well, and I love the term I've heard a lot of people use lately, and that is marry the house, date your rate.
Yes.
Because you can always refinance. If the Fed ever does do something like that again to help, stimulate the economy, take advantage of it. Refinance. I personally refinanced my house twice during it, just because it's like they can't go any lower.
Right.
And then they did.
You're like, what?
So
I love that because it really is more important that you as a consumer are living in a space that works for you and that works for you, a physical space, but also that works for you financially. So if there is a time where a rate gets better, refi. So what is a refi, Ryan? What does that look like? Tell us about what that means.
Yeah, so there's a handful of different refi options, okay? So one of them is just, where we can just refinance what you owe on the house. Obviously, with the way that home prices are always increasing here in the DFW market, potentially there's a good equity position in your home. You might want to refinance, take some cash out.
Explain what an equity position is.
All right. So equity position means the value of the home versus what you owe on it.
Okay.
That difference is your equity position, okay? In Texas, you can borrow up to 80% against the value of the property, okay?
Love that.
Yes. So it gives you a great opportunity. So especially right now in the summer in Texas, you might want to put in a pool.
Yes.
Take some equity out to do that. Maybe consolidate debt. There's a lot of different endless opportunities you could do.
So you're essentially taking a loan out from yourself.
Correct.
I love that. And what a unique financial opportunity that we have right now, because our market in the state is so strong that if you did own a home previously, you most likely have a larger equity stake than you started out with. So that's pretty exciting.
Yes.
It means it's a good investment.
Yes. buying real estate here in the DFW market, it never goes down,
Right.
really. It's always a great investment.
So actually my parents, they were talking the other night, and my dad said that the house that they purchased in the mid 80s, their rate was 18%.
Yes.
And everybody told them it was a bad time to purchase. However, that house was around $100,000.
Okay.
Now, in 2022, if they were to purchase that house, it is in the suburbs of northern Chicago. That is an $800,000 house. So a $100,000 house with a mortgage rate at 18% over the span of all those years, they're still winning. I mean, and they have all this equity. So just because a rate is high doesn't mean that you're making a poor financial decision.
Right. And comparatively to where your parents' interest rate is, we're still historically low.
Okay, so tell me, as far as the life cycle of the past 100 years, I mean, how long have we been having mortgages around?
Oh, gosh.
Like for a long time?
Yeah.
So what does that cycle kind of look like?
I mean, so typically, like right now, I want to say the average homeowner is kind of staying in a house every 3 to 5 years.
Okay.
Okay. So that's about the cycle span.
Nice.
But obviously everything kind of comes around full cycle. Right now, rates are just going through one of their deals, like what we talked about inevitably. This whole thing that the Fed's done, this is something new that they've just started back in the 08, 09 timeframe from the financial crash. So inevitably, who knows, 5-10 years down the road, they could do it again. Rates dip, you refinance.
Then we refi. I like money. We refi. We take out equity. And if you really want, maybe buy another house with that. Maybe buy an income property with that.
Exactly.
So let's talk a little bit about loan types and down payments. Do I have to put 20% down?
Absolutely not.
Oh, okay, good. That's a lot of money.
Yes.
So tell me why everyone seems to think that's the magical number, and explain the different options that you have to put down payments down.
No, absolutely. So, I think it's been just a general, thought that everybody has had. Everybody's always presumed that. But now, you can actually, so a first-time buyer now is actually considered someone that hasn't owned a property in the last 3 years.
Oh.
So you could have been a previous homeowner at some point in time, been renting for the past 4 or 5 years, and now you want to purchase again. Yeah. Now you're considered a first-time buyer again. So
Interesting.
There's a lot of great options for that. You can go as low as like a 3% down payment.
Love it.
Okay, as a first-time buyer. But if you're a veteran, you get 100% financing. If you're looking to buy out into country, you got USDA programs that do 100% as well. So those are just a couple different options right there. Now, keep in mind, you still got like closing costs, stuff like that, title fees, things of that nature that you may be responsible for. But, you're financing 100% of your purchase.
Which is kind of a sweet deal,
Yes.
especially because if you're renting, you're most likely paying someone else's mortgage, whether that is a developer who owns a multifamily or an individual who owns a single family and then is renting that out. So I always say bet on yourself.
Correct.
If you like the house, I like the house. Let's get the house. So a little bit about this loan options and programs. Is this a conversation that you're going to have with my buyers the first conversation, or is that something that you kind of talk about later once you've looked at financials?
Both.
Okay.
You know, honestly, it's something that we want to talk about up front because, again, that's figuring out that financial goal with the home purchase and trying to help understand, like, based on their financial goals, what type of loan programs and products are they going to be looking for, you know? Then as we start looking at homes, seeing what areas, you know, then there could be certain loan programs for those certain areas that we might want to explore as well.
Yes. So one of those that I've had experience with is in Northlake. I had several clients qualify for USDA loans.
Yes.
So tell us a little bit about those.
So USDA loan is, again, that's a great product because, again, there's only really 2 programs out there that allow you to 100% finance. That's if you're a veteran or active military, or you're buying through USDA.
So that means you can purchase a home and your down payment is $0.
Correct.
Did y'all know this? I mean, I hope that you take a minute and breathe that in because that's fantastic.
Yes.
Yes. Okay. Keep telling us about USDA.
So basically, it's just a loan through U.S. Department of Agriculture. Basically, it's to help, you know, in these rural areas. But again, there's so many areas around here because of the rapid growth. They're not really rural anymore.
Right.
You know?
There's a Target, and you
Yes.
could get a USDA loan.
So it's a great opportunity to explore and look in those different areas, see if you qualify for one, you know, and take advantage of that opportunity.
I love that. I just feel like there's so much that kind of goes into lending that even as a realtor, I don't know. I mean, I tell my clients all the time, I am not a lender. You have to talk to your lender. It's so important and it's crucial. You could lose a deal if you don't have the right lender supporting you and giving you good information. And I mean, there is nothing worse than having to back out of a contract because there's a lending issue that could have been handled in that very first phone call. So I guess let's talk a little bit more about, I mean, what is something that you wish the average consumer knew about the lending process before they even talk to either of us?
You know, understand, you know, there's going to be a lot of personal information that's gone over.
Right.
Okay. And you got to be comfortable in regards to opening it up about that. Okay.
And knowing it.
Yes. Letting us know, like, what's happening, what's going on, you know, because we will do a deep dive.
Yes.
There's a lot of background stuff that takes place, you know, so go ahead, tell us, like, we're your friends here. We want to help you out. We want to find a solution here, you know, and how can we work around this to make it all come together, okay? So it's important to make sure that you're upfront and honest about everything because it will come out throughout the process eventually. Yeah. And it's a lot worse and harder for us when it comes out later versus us knowing that information up front so we can come up with solutions, you know.
To combat whatever that hurdle might be.
Correct.
So give us an example of something that you or a colleague has experienced in regard to that. So give us the dirt.
You know, like I got a great scenario that we're dealing with right now where the client's actually in litigation on another property.
Uh-oh.
Yes. So you're involved currently in litigation on a real estate property. Like banks and lenders basically want to take a step back and go, we don't want to get involved.
Right.
In you now buying another home because we don't know how all that's going to maybe potentially impact this property.
Yeah.
Okay. So we get through the processes and the hurdles and everything, and we come to find this out, and underwriting finds it out. Oof. You know, that obviously creates a lot more challenges.
Tell us what underwriting is.
So
they're the monsters.
No,
I'm kidding. I'm kidding.
Good.
We love them. We love them.
Yes. So basically, really all they're doing is just doing a cross-check. Just basically, you know, just looking at the documents provided by the client, just making sure that this is, you know, all matches up. Really, that's all they're doing. Okay? But, you know, obviously, they got to make sure that they're protecting everybody, too.
Because you're borrowing a huge sum of money, and essentially your lender is making sure that you are capable of repaying that amount of money. So that is just kind of the simple piece of what you're doing. So we don't have to, of course, delve into 2008, but I think a lot of my buyers and sellers are concerned that we may have some type of repeat or bubble or something like that. And I think that also goes hand in hand with, I'll warn you at the beginning of this process that you will love me through the end. You're going to be super annoyed with this guy right in the
No.
middle because of all the paperwork that you are going to be required. So why is there so much paperwork? What is different now that wasn't happening in 2008 in regard to what's required?
Simply put, the ability to repay.
Yeah.
That was a lot of it. I mean, back in prior to 08, 09, I mean, we didn't really document someone's income or ability to repay the loan.
Interesting.
Plus, I would say, if I had to throw a number, 90% of the loans being written back then, I mean, they were all on adjustable rate mortgages.
Ugh.
Okay?
Nightmare.
So
Yeah.
it was just honestly, it was a perfect storm that just kind of created that big bubble that blew up, in the housing industry in regards to the fact that, we had people on adjustable rates. All those rates started to adjust. We didn't document the income and their ability to make those payments, and it just caused a whole housing meltdown.
So essentially, people were qualifying for mortgages where they might have been able to pay that off at the beginning, but because there's an arm, which means your rate is going to change and go up after a certain number of time, certain number of years, they didn't know or weren't aware of the impact that would have on their monthly payment. So having a mortgage with an arm might be great at the beginning, but nobody was delving in to see if when that rate increased, those payments could be made.
Right.
Perfect. I think that information's so helpful to the average consumer because I think what everyone saw in the news was a house is a bad asset. Everything's crumbling. Nothing's worth what you think it's worth. And I just don't think that is the case today. And I think it's because of all of these new federal guidelines that are really requiring the deep dive into your finances prior to purchasing if you're going to need a loan.
Correct.
So I feel like that's so helpful to the average buyer. What question do you get most often from a first-time home buyer? And then what question do you get from someone who, say, might be about to purchase what they're considering their last home, or they're at the end of this purchasing cycle?
Obviously one of the big questions I get from first-time home buyers is trying to understand just, what we were talking about earlier in regards to the different products and programs that are available out there. Every buyer has different needs,
Right.
I guess you might say. So it's really just trying to work with them, helping them understand what's available, like if there's any kind of assistance programs potentially, sometimes understanding why it's good to take an assistance program versus not taking
Free
one.
money.
Well,
Well,
yes.
Most of the time.
Most of the time.
If it's a grant.
Yes.
Yes.
So, but, trying to help them understand, like, what is best for them financially, what's going to help them get into the home, but also get into the monthly payment. So that way we're not dealing with a situation down the road where they can't afford the home.
Right.
So,
And I just think that's so important. Just if you come into this process knowing this is the number that I want to spend each month, and it is this percentage of my income, and then work through that on the front end, that is going to make both of our jobs a lot easier, but
Yes.
also it's going to make their process a lot smoother,
Yes.
which is the goal.
yes.
Because this is just such a big financial decision, and we want it to be an emotional decision for our buyers and sellers, but we also want to kind of safeguard that experience for them and make sure that they're not going to be in a world of hurt a month after closing.
Yeah. Well, and that's one of the big things. Myself and my team, we've been in this industry over 20 years. And so, again, going back to one of the things you were talking about in regards to documentation, we can set that expectation of what all documents are going to be needed
Nice.
from those clients up front.
No surprises.
No.
We don't
And-
like surprises in
Yeah,
lending.
no. Buying a home is a fun process.
Yes.
And we want to bring the fun back into mortgage.
Absolutely. So tell me a little bit about your experience starting off as a lender and a little bit about your team now and where you're at.
No, so great question. Obviously, I got into lending as soon as I graduated from college. A bunch of my buddies were in it, and they're like, "Hey, it's back in the subprime days.
Oh, money, so much money."
And they're like, "It's so easy." I'm like, "There's nothing that's easy in life." Okay.
No.
Well, sure enough, yeah. Back then, mortgages were. So, obviously, that's why everything happened in 08, 09. But it's become a passion of mine. It's every day I get to help people with the joys of homeownership. And so it's just something that I've really just taken a hold of. I like to help as many people as possible. So, I've added on additional people to help me.
Nice.
I've got a team of 10 people that support me on a daily basis, just me personally, and helping me and my clients that we work with the fun of buying a home.
Yeah. And I love that too, because when push comes to shove, all of us want this to be a smooth and fun experience because it can be very stressful, but it really doesn't have to be. Yeah. And I think a lot of that is just having the support around you and really setting those expectations with our clients. I think the thing that also might get a little overlooked in the lending arena is from the seller perspective. So a lot of times when I'm presenting offers to my sellers, they don't even quite understand the differences between loans and how that might impact closing times or the strength of the potential buyer. So can you talk about, when you're selling your personal home, what does your perfect buyer look like in the terms of lending?
So if I'm selling my home, a handful of things that I kind of look at is, sometimes their down payment, I want to see who the lender is too that they're working with, okay?
Relationships.
It's, being a lender, there's a lot of lenders out there, that they're very, in a box type lender. They don't see outside of it, and that can create challenges through the loan process, okay? That challenge can create delays, which could eventually lead to the loan not closing potentially, okay? And right now, there's a lot of lenders you're seeing in this industry that are closing their doors,
Layoffs.
getting laid off.
Yeah.
I mean, that's on the headlines every day. So, that's a very important thing to also consider is that, hey, is this company still going to be there when it's time to close?
Yes.
So, those are all things people really got to take into consideration, because at the end of the day, as far as rates go, like what we were talking about earlier, there's not a lot of difference.
Right.
Okay. Everybody's rates are very similar to one another. So it's really about the loan officer and the company that you're going to work with.
I love that because it really just comes down to building communities and building relationships.
Yes.
So I think one of my favorite clients that we've worked with together, I called Ryan on it was probably like a Saturday afternoon. I think it was like 4 p.m. And I was like, we're in trouble. I have a client, appraisal's a nightmare. We're not going to close. And they are from a generation where computers are very difficult. So Ryan answered his phone. This is the number one most important thing, I think, in a lender is that they answer their phone. And if you call your lender and they're not answering your phone, that is very telling. If you do not have a phone number to reach your lender and they do not have a name that I would consider that a red flag. So, of course, Ryan answers my phone call, and then he goes to my client's home and walks them through the paperwork. And we got that sucker closed, VA loan, in, what was it, a week? I mean, it was zero time flat. It was so fast. So that is the difference that a reputable lender who believes in relationships and client service, it can just make all the difference. I mean, my clients would not have they wouldn't have their home right now if you wouldn't have been on it.
Yeah.
So I just so appreciate that. And I think that's just something that I want all of y'all to consider when looking at lender options. Interview them just like you're going to interview us. Find somebody you trust.
Yeah. Well, and a great resource. And I'll tell you this here that, every loan officer has a license number. You can go on and you can look their license number up, find out how long they've been doing
Yes,
this.
please do. Realtors too. Check us out. I know some of y'all spend more time researching random internet strangers that might want to date your friends than you do your real estate agent and your lender. And I feel like that's really dangerous, y'all. Search us, look us up, see.
Yes.
You can see if there's any complaints or any issues, or is this their first loan?
Yeah. Experience is knowledge, you know? I mean, great scenario. We've got one dealing with right now where they were working with an online lender, and turns out the loan officer, like, this guy's trying to get a house, and the loan officer just terminated their application.
Oh my gosh, that's like, I'm sweating.
Yeah. And
that's my worst
I mean,
nightmare.
sure enough, we looked the guy's license up. Yeah, he's only been doing this for like 90 days.
Oh my gosh.
But he's with one of these big online lending companies. I'm like, well, that's what you get.
Right. It's just, we want y'all to be educated consumers, and we want to just make sure that you have what you need to become educated consumers. So today we've kind of covered why a lender is important, what type of loan programs you may qualify for, what a pre-approval is, and why, if you're working with me, I will require one before we step in any home that you don't own. And then we've also talked about some of the larger lending pieces and the Fed, rates, mortgages, trends. I think we've hit the gambit.
Yeah.
I mean, what am I missing?
You got me.
All right. Do you have any Texas tips?
Oh,
People
gosh.
moving to Texas.
Obviously, when you come to Texas, the barbecue.
Oh, yes.
And there are some incredible barbecue spots here in the DFW area.
Yes.
The hole in the wall, the little small ones you would never think of. You know, especially right here in our local area.
Plug them. Tell us what you like.
Oh, my gosh. So you can't go wrong with some hard eight.
Agreed. 100%.
That big open pit. And let me tell you guys, if when you go, just be forewarned, all right? You're going to get more than you could ever imagine because it all looks so good. I also love, there's a little local spot called 407 Barbecue.
So good.
Yes.
On 377 and 407.
Yes.
Or not 377. 35W.
Yes.
Right? Yes. Right there on that Argyle line.
35W. Yep.
Check it
So
out.
that's a great one right there. And then there's another great one like this over in Trophy Club called Meet You Anywhere.
Ooh, I've never heard of this one.
Oh, yeah.
I gotta go.
It's incredible. The jalapeno sausage.
That's a win. And also, I found that if you're looking for barbecue and they don't have mac and cheese on the menu, this is not a barbecue place you want to go to.
Yeah, and Meet You Anywhere, they got a jalapeno mac.
Ooh, now I'm just hungry. Well, this has been so much fun, Ryan. Thank you so much for taking the time. And, how can people reach out to you if they want to interview you as their lender?
No, call me personally on my cell.
Yes,
okay?
What is it? Tell us.
817-366-6376.
And can we also get that in our show notes so people can reach out? I love it, y'all. Call Ryan. I trust him. I hope you interview him and then trust him too. And whoever you end up using, please, please, please do your own deep dive and make sure you know who you're working with. So this has been Come Home with Jennah. And we have one of my favorite local lenders, Ryan Grubbs, here today. And do not forget to tag your friends, like, share, subscribe, do all those things. If you have a Texas tip, I want to know it. And if you have a question, you can also leave that question for me to answer at my website, comehomewithjennah.com. Bye, y'all.